Hello, good morning, trade pros. Welcome to our morning market update for Thursday, July the 6th of 2017. Geez, it's already Thursday, but it's hard to not feel like it's Thursday when you had 2 days off, right? So this is our second trading day or working day of the week, and it feels awesome. All right, let's talk about today's market updates. In Asia, Japan's down 0.4%, Hong Kong is down 0.2%, and China is up 0.2 as well. India up 0.4% on the session. All right, so mixed markets overall in the Asian session. London's down 0.6%, Paris is down 1%, Frankfurt's down 0.7%. The selling starting to intensify a little bit here in the European session. And in the US, Dow is down 0.3%, S&P is down 0.4%, Nasdaq's down 0.7%, crude's up 1.6%. Big rally yesterday after a sell-off. All right, gold up 0.2%, treasury yields plus 3 basis points to 2.36% yield. All right, today's economic calendar is pretty busy. There's a lot to digest. All right, we had challenger job cuts, we had MBA mortgage applications. ADP was the big one, the ADP jobs report. It's a precursor to the more important jobs number tomorrow. Tomorrow's the non-farm payrolls statistic, comes out once a month on the first Friday, sometimes the second, depending on when the May 12th or the 12th of the month reference date is. Long story. But it's tomorrow for the month. All right, it's a big number. The Federal Reserve's concerned about jobs and they're concerned about inflation. We'll talk about the Fed as well in a few moments. All right, that's coming out tomorrow. Today's ADP number missed. We'll talk about the miss and the magnitude of it in just a moment as well. At 9:45, we have PMI Services Index. Then we have at 10 a.m. ISM Non-Manufacturing Index. And then we have crude oil inventories at 11 a.m., which is different than the usual time frame. The API number came out yesterday for crude oil because Tuesday was a holiday. So I'll explain that in a little bit also. So we got a pretty busy session in terms of news. Everything is crammed from the first 3 days until the last two here of this week. So let's talk about the Fed. Yesterday we saw the meeting minutes out of the Federal Reserve, their June 13th to 14th meeting. If you guys recall, that's when they hiked interest rates. All right, excuse me. And one of the statements here that really caught me off guard, but the market just shrugged it off, is that the Fed said the following. And I quote, this is verbatim: a few participants expressed concern that subdued market volatility, coupled with a low equity premium, could lead to a building of risks to financial stability. What does that mean? Is anyone shaking their head like, what? Can you just imagine inviting Janet Yellen over for dinner and she started talking like that? I don't know what to do. I'd say, Janet, drink more, or Janet, drink less. Or Janet, start drinking, darn it. I don't know what I would do. But anyways, all that means, that's Federal Reserve talk for the market. They believe the market is overvalued and it's posing stability risks to the equity markets. They basically said equity markets in a bubble. It's overvalued. It's gone up too much. And that's forcing their hand a little bit of what they have to do. All right, so that caught me off guard. The market didn't really react to it much. And that's fine. That's okay. The market can do whatever it wants. But I kind of saw that and I said, I'm going to share that with the team because I think that statement was missed, a larger factor. The other stuff, every news outlet covered. For example, balance sheets. Several members preferred to announce a start to the process within a couple of months. So talking about the unwinding of their balance sheet. I want to remind you guys, they haven't started to do anything. They're still deliberating and discussing it. The Federal Reserve is an institution that talks a lot and does little. But by the time it starts doing it, it stays on course at least. So they're discussing the event of unwinding their balance sheet, and some members expressed the need to communicate that process in the next couple of months, or said differently, before the end of the year, which is what they've led us to believe all along. All right, so they kind of strung us along. All right, however, on the flip side of that, some others emphasized that deferring the decision until later in the year would permit additional time to assess the outlook for economic activity inflation. That basically, the flip side to that was, all right, I know we want to do it next couple of months, but let's do it later on towards the end of the year so we have some more data. All right, so we see a few more data points, a few more CPI releases, a few more jobs report. And that's kind of where it's at. It's sitting at somewhere in between. So we're thinking the first 6 months of the year are over. The last 6 months, we're looking at a decision from the Fed or a communication of how they're going to unwind their massive balance sheet. They already give us some idea, but how they're actually going to do it with some very clear targets and numbers, how much they're going to let run off the balance sheet and so forth by around September till as late as December. But I do think they'll communicate it this year. I do think they're going to unwind the balance sheet, and I do think the market's going to crash because of it. Okay, flat out and simple. I'm here on the record. I said it. I think it's going to lead to a drop of about 20 to 25% in stock prices and bonds. So I'm not very optimistic about this unwind. But what could I do? I didn't create the problem. The Fed shot itself in the foot. Now they got to heal it. The wound's got to heal, and it's going to have to hurt a little bit. All right, nobody could just fire bullets back and forth and hit targets and not expect anyone to be in pain. Somebody's going to have to feel the pain. That's the whole problem with this world. Everybody wants their entitlements. Nobody wants to go through a little bit of struggle to work for that entitlement. All right, I'm not saying it's you listening to this, but I'm saying as a whole, as a collective, the masses, we expect everything and expect to pay nothing for it. Well, that's great if you're looking at pictures on Instagram, but unfortunately, the economy doesn't work that way. All right. Here's another note. Several participants were concerned about low inflation. That's a big concern for the Fed. All this money they're throwing in the market and prices aren't increasing. Inflation is an increase of prices. All right, what is that telling you? It's telling you that money's not making it to the end consumer. It's telling you that it's not making it to businesses. It's trapped in the vaults at the banks. Trade pros know why. We talked about this. It's one of the biggest thefts and frauds going on right underneath your nose, and you don't know about it, is the Federal Reserve and what they've done. Trade pros understand this. If you don't, sign up. You watch some of the webinars that we've done in the past. All right, odds increased to 20% for a rate hike in September as a result of the Fed meeting and meeting minutes yesterday, and over 60% for December. So there you go. There's the Fed. Overall, the Fed's been hawkish. They're raising interest rates. They're increasing rates on a hiking cycle, and they're going to start to tighten the balance sheet as well as they unwind some of those assets later on in the year. Now they've kind of put a time frame to it. Now we need the details. Tell us the details. The jobs report today, the ADP number came out this morning at 158,000 jobs, grotesquely missing the expectation of 184. That's going to put some bearish pressure, I think, on the open on the U.S. session. We have to look at the charts a little bit more in depth to confirm that and confirm some levels. But I can tell you this is a big miss. Now the eyes are on tomorrow's number. All right, 230,000 jobs previous month, 184 expected, which is less than the previous month. So it's already kind of was given a low hurdle to jump over, and it whiffed, came in at 158. So ADP jobs report did not do good. But before you go nuts and start shorting everything, remember this. Last month, ADP jobs report smashed it on Thursday. It did phenomenal. And then Friday, we whiffed on the more important non-farm payrolls report. So if the reverse happens this month, we should have a good NFP tomorrow. But what I'm telling you is don't use the ADP as anything more than just a little bit of an idea of what could happen. Don't use it as a definitive trading signal, or you might as well just hand me over your trading account and write me a check, because I will get it from you on the market if you trade that way. Unemployment came out. Unemployment claims today came out at 248,000 versus 243,000 expected. So unemployment claims slightly higher than expectations, but kind of in line with the number, in or around the proximity of it. They're still low as they've been in almost a decade. So yeah, it's a little bit worse, but it's still low. So that's really kind of not a big deal. For tomorrow, for tomorrow's jobs number, the forecast is 175,000 for non-farm payrolls, because we're not going to do a market update tomorrow because we're going to be trading with the group at 8:15. So tomorrow, Trade Pros, 8:15 in the morning, we're going to open up our trading room a little bit early to trade the non-farm payrolls. If you'd like to subscribe, get the day trader package. That's where the live trading room is. Or if you get the bundle, you get the options education, options tools, and the options newsletter. It's daily and weekly as well. So we do send 6 newsletters a week, and that's the option side. If you want to trade with us live in the room, it's Day Trader Pro. It's a $99 package. If you want to get both, you could save 20% and bundle them for $139. All right, that's how you join the room. So this will probably be the last update of the week. Unemployment rate expected at 4.3% for tomorrow. Average hourly earnings expected at 0.3. Remember, the previous month missed. You got to just keep your head on a swivel tomorrow and trade it. I can't tell you how to trade it now because it hasn't happened yet. All right, I'm not a gambler. I'm a trader, totally different concept. All right, I'd like to see the number first, and I'd like to see how people react to it and then jump on board rather than make a call, make a prediction, get my little crystal globe and rub it and tell you what it should be at and how you should trade. That's nonsense. No one can tell you that. All right, weekly API oil inventories yesterday came out at, what do they come out at? Crude came out at minus 5.8 million, big draw on crude oil versus a plus 0.9 previous. So essentially, there used to be a build of inventory or a storage increase. Now there's a storage draw. So we're using that oil inventory, which is a showing of lower supply or increased demand, one of the two, potentially both. So crude oil has done well today. We get to see the Department of Energy statistic at 11 a.m. Stay tuned to that. Gasoline had a draw as well, 5.7 million barrel draw. Distillate slightly positive, and Cushing inventory down 1.4 mil. So all in all, very strong report out of crude oil, and that kind of led the way on the 1.6% rally so far overnight. So we're continuing to look for some upside on crude. I think we tried the downside move, and I think that got erased really quick. We might rally it a little bit more before turning. It's very important to watch the Saudi Arabia and Qatar situation and take your cues from there. All right, let's finish off with this. Tesla's down another 3% pre-market on top of yesterday's 7% fall. All right, it's its biggest percentage decline in more than a year. Worries grew over its delivery numbers. It said it can't meet delivery. It blamed the battery problem. And news from a new set of crash tests also didn't really help. Tesla's always claimed to be the safest car in the world. All right, but the Insurance Institute for Highway Safety is questioning that. That it is the safest car in history. And these new set of crash tests show data that maybe it isn't as safe as they claimed. So it's interesting to see that kind of unwind. I mean, I always knew Tesla was ripe for a short. It's just a matter of when. Right now, at this point, at this juncture, wait for rallies and just hit the thing over the head. All right, it's a cruel thing to do, but when it's injured, that's when you want to start taking some blows at it because you got a chance of winning. All right, it's kind of like seeing a deer on the road, and you could either slow down, a wounded deer, you could either slow down and help it, or just hit it one more time and throw it in the trunk. That's all the market is. It's a terrible analogy, really, but that's what happens when Tesla's going down. Have no mercy. Hit it as a short seller. Go in there and get push or get some put options and just whack that thing lower. That's the market. If you don't do it, somebody else will. All right, that's where we're competing in. That's the arena we're all trading in. Tesla's down. I think rally should be sold on the Tesla stock. It might have a bit of a relief rally, and that's where you want to hit it. Trade Pros will show you guys some info on that in this Sunday's update on a trade idea I want to build up around Tesla. All right, guys, that's all I got for you. So sign up if you want to join our Trade Pro room. We trade in there live every day. And speaking of that, I'm going to end the broadcast here today. I'm going to go and open the trading room. We're going to go in there and trade the morning session like we do every other day. And we're going to kill it. I got a good feeling about today. Take care, guys. Have a great day. I'll see you back here on Monday. No morning market update tomorrow because we'll be busy trading the non-farm payrolls. If you want to trade it with us, join the Trade Pro Academy room, get the day trader package or the pro bundle, and trade it with us in a live environment with our entire community. Take care. Have yourselves a wonderful day. Trade Pros, hang tight. Let me open up the room and turn off the light here before I get a severe tan. A sunburn.